Okay, welcome to the podcast, Mr. Jim Bartelloni. How are you doing, my friend?
Good, Jerry. Always good to see you, man. Always good to see you. Here you got a
You too.
vacation coming up.
I do.
Awesome.
I am looking forward to it. Actually, we're pre-recording this show by a little bit, so that hopefully I won't have to put in too much time on that vacation. Yeah.
No, Portugal's awesome.
Yeah,
It
I'm
is.
looking forward to it.
Nice. Cool.
So, dude, it's been 2 years
Can't
since
believe
we did one of these.
Blink, right? It's nuts.
Yeah.
It's nuts.
Amazing what's happened in the market in the past 2 years.
Unbelievable. It's
Yeah.
incredible.
So, for people that weren't around 2 years ago, can you give us a little intro? Tell us about yourself and kind of
Sure.
your analysis methodology.
Absolutely. So Jerry and I are classmates and friends from the Naval Academy. Spent some time at Navy and in the Navy, and then got out and kind of found technical analysis. I didn't take any business courses. Did you at Navy? I didn't take economics
No,
course,
I didn't know there was business courses.
yeah. And so my first introduction to investing was a chart. I didn't even know what fundamentals meant, fundamentals in basketball, not
Right.
CPI, PPI. I just don't understand that stuff. It's too hard. So I just kind of went down the path of pure charting, and I had a hunch. I'm still trying to prove that hunch. But I had a hunch that the market was stopping at a number for a reason. And so when you start trying to really look at the market from that perspective, what you end up ultimately doing is looking at a lot of leading indicators. And that's kind of the cue for patterns, for pattern recognition. And, in order to trade on patterns that, you might see 2-3 weeks or months in advance, with no fundamental backing, it is kind of like, does this work? Right. And so I had to prove it to myself. Quite frankly, I think I finally took the red pill 24 years later. So, I've been studying this stuff on the charts for 24 years, and it's all pattern recognition. It's all measured moves. And I just don't pay attention to the fundamentals. Are they important? Absolutely. And I think a blend of them is probably the best thing to do. But at this point in my life, I'm just too lazy to try to figure out how to read a K1, you know what I mean? So I don't even know if that's what the name is, but so it's all patterns. And then I was a Top Gun graduate flying Tomcats. And so I went looking for a patch. Or how do you get some recognition that, you're somewhat okay at charting? And that's when I found the Chartered Market Technician, or the MTA, Market Technicians Association. So I went through that process and I got a CMT. So I'm a Chartered Market Technician. I don't know if I could technically call myself one, because they want you to pay like $250 every year to keep your designation. I'm like, why? I don't have to pay to say I went to Navy. You know what I mean? So I've kind of let that lapse a little, but it's a wonderful organization. But I technically am a CMT. And then I taught, so we modeled the Chartered Market Technician program after the CFA. So it's a 3-test, 3 progress, CMT 1, 2, and 3. And we came up with the CMT Institute. So I was a level 3 instructor. That was Elliott Wave, really intermarket analysis, how the whole, what we'll talk about, the circle of life, right? Fixed income, commodities, both softs and hards, FX and equities, global, all the way down to CONUS, how they all kind of do the same dance. That's intermarket technical analysis. So seeing something over in another market like the yen could give us an idea to look over in financials. So that was very interesting to teach, and I learned a lot from that perspective. And what became really powerful was that the patterns work on a lot of these ratios that we'll talk about. So been playing around for a long time. Every once in a while, I get to go hang out with JC on All-Star Charts and Stock Media. I get on Larry's show, and we have a lot of fun. And you're a bud, and I'm stoked you're going on your first vacation. So hopefully, I can help out some of your subscribers and people watching your podcast to manage markets in this, or manage risk in these markets.
Yeah, like we talked about, I mean, the market has ripped straight up since April.
Yeah. Pretty amazing.
And there hasn't been a bobble. I mean, I think we had 2 red candles on a weekly basis since April.
Yeah.
And that's going right through the worst seasonal 6 months of the year.
Yeah.
Right.
Yeah.
So there's a lot of FOMO out there for sure. And at the same
Yeah.
time, there's a lot of concern that we're at extreme valuations,
Correct.
right?
Yeah.
So the question is there any reason to expect that the trend isn't going to continue?
Yeah. I think so. We're butting up against significant resistance. That means we pause.
Sure.
Right. Now, I can tell you that I have a friend who works over at Elliott Wave International. They're calling for 6-5 stacked on top of each other right now.
Yeah.
And this is a grand super cycle 3. We don't need to get too deep into it, but grand super cycle is the largest degree. That's a wave 3, which means ultimately it should recover and go back up to new highs. But using guidelines of Elliott Wave, it likes to correct to the wave 4 of a lesser degree.
Right.
Folks, that's the 2009 law.
Yep. Yep.
It doesn't seem possible, right?
That's the thing. So when you talk about grand super cycle, you're going back to the 1800s.
That's right. And some of the charts, some of the projections that I've worked are from 1896, right? The Dow was established May 26th, 1896. And the all-time low is August 8th, 0808, 1896 at $28.48. So those projections are happening right now. I think there's a lot of things we need to take into consideration. My really good friend and a mentor of mine who we email and text all the time, Larry Pesavento, he's tremendously bearish. However, Larry's a big day trader, right? So for him, a 10% correction's really bearish, and he can lever up and make a lot of money on it, right? He's not talking about a 40, 50, 60% correction. 10% correction for him is great.
Yeah.
So I get Larry's newsletter. He's the only newsletter I get, just because it's free and we do patterns, and I'm like, oh, I see that. And in fact, the 2 charts that'll show for your paid subscribers, he actually put it as newsletter last weekend, and it's a 1896 projection for the Dow. That, oh, by the way, we hit almost exactly October 29th, and then it's also a big projection and square out of the New York Stock Exchange Index from its inception, which I think was like January 3rd, 1966. Some say December 31st. It's somewhere between the last day of December and the first few days in January of 1966. So we're butting up against significant long-term resistance. I expect resistance. I expect a pullback. Martin Armstrong, I think he's one of the best out of Armstrong Economics.
Yep.
He's saying, yeah, a little bit of resistance, but we're going to new highs. Okay, right. So we've got people who've been in the market for 50 plus years, have made their living, and we have basically the Democrats and Republicans.
Right, right.
They're completely different, right? So for me, let's make it easy, right? I'm expecting resistance here and now, but ultimately we're going to get a buy pattern. And if it's still bullish, the buy pattern will work. If it's not, it won't, and we could be going down. Again, we'll go into it for your paid subscribers, but the Bradley stock market model.
That was a great chart. That was a great chart you put out on that
Yeah,
Bank of America.
Yeah, it's turned down, and it's not necessarily a trend tool from the perspective of if it's turning down, it has to turn down. It's not that. It's actually dates.
Yep, timing.
So it could inflect. And we had a massive moon last night, and the market's up today. Maybe it's game on, right? But what I'll tell you is, having done this for 24 years, I just don't see us blowing through these levels right now without a pullback.
Yep.
I wish I could be more succinct for you. I'll go a little bit deeper into it on the paid one, Jerry, but I don't know what's going to happen after that, right?
Yep.
The other thing is, war is on the horizon. We're trying to work peace out and everything. Europe's a disaster. They're a disaster. Japan is a disaster. China a little bit, but ultimately, what's the only game in town? The U.S. stock market.
U.S. Yep.
Right. So I don't want to see it blow through these levels right now, because it could be a parabolic explosion higher.
Yep.
The fever, the furor, it's like back in the day when we used to party in the Navy, right? 4 shots of tequila is great. Why do you need 8? You know what I mean? The hangover is going to be so much worse. So we want to pull back here. Everybody knows we should get a pullback here. If we continue higher and literally go out into space, we used to bullseye the jet. We go at 500 feet, about 500 knots or so. And then you do a max sustained climb, which means you don't bleed any energy, right? And so you keep your same airspeed and you just sustain it and then you park the jet. That's what's happening, right? But for some of these charts, we're kind of here.
Yeah.
And be nice to correct. And okay, so now we'll keep on this path.
Yeah.
If we do that, it'll go to sustained power, piece of S equals 0. It will have to crash.
Yeah, false. Yeah.
That's just, it's physics. Yeah. So we're just hitting those inflection points on a couple of them. And it's like, okay. And I got to tell you, and for your subscribers and people just listening to the podcast, don't get greedy. Because if we go parabolic and this thing does take off, the vacuum of selling that will occur. Everyone's going to try to get out of the same little bathtub, and they're not going to be able to. And we are going to have a whopping thump, and that could not be good. So I'd like a little 10 to 15% correction here, and then get game on. So does that make sense?
Yeah, it makes sense. I think most people watching this are not looking at charts going back to the 1800s, right? That
no one does. Yeah.
Right. There, at best, most people, I retired a couple of years ago. I lived through, I lived through,
we've had a hell of a run.
we have. I mean, the tech bubble, the great financial crisis, and then we haven't seen anything. What's that?
Housing bubble?
Oh, I don't even want to talk about the housing bubble.
Oil, remember oil up 144?
Yep.
9/11.
And then of course Bitcoin
and Bitcoin, AI.
Yeah. So, but that's most people's life, right? Most people in the government now probably didn't get in until 2009-ish, and so the market always goes up.
Straight, absolutely.
Right. And we all know that that's the mindset, the recency bias, all that. And it takes looking at broader charts to see that that's not always the case, right?
Correct. Yeah. So anyway, people, and a lot of the charts that people have, the charting package, they don't go that far back. That's why I love TradingView, right? You can do the trend line on a log scale on the Dow Jones Industrial Average all the way back to 1896. It's butting against it, right? So when you start looking at 47,000 on the Dow, it came from $28.48. What's a 10, 15% pullback? If you have the long term in mind, right?
Right.
If you're just day trading, oh my God, and that's Larry, right? Larry's calling for a big move down. Well, 15% for a day trader is massive, right? Elliott Wave people, they're talking for a macro. Go, sorry.
Yeah. No, I'm just saying if you're thinking in terms of log scale versus nominal, it makes a huge difference, right? Because if you're back in, if you're looking at a chart from 18 whatever and you come down 15%, it makes a much bigger difference than if you're looking at a chart from last week and it comes down 15%. So
exactly. Yeah.
That's always difficult to get across, is the understanding the scale of what you're actually looking at.
That's right.
And the scale of your investment lifetime, right? So all right, let's
yeah. So ultimately, I wish I could be like, oh, we're going down hard. All I can say is I think we're hitting resistance, and I expect a corrective move. I would like to buy it. You've got to give it a buy try, and I looking at the Bradley market model, shoot, maybe about January. Middle of January. Let's see where we're at. But ultimately, I'll look for a measure move or a pattern, and I'll put my toe in the water there, and it'll work, or I'll get stopped out, and I'm like, oh, okay. I don't know if did I put that one chart in about XLF, and I was showing the butterfly sale. It was perfect sale, and I remember I called a buddy up. I'd gone to happy hour. His name's Paul Gill. I said, hey, Paul, and it was right after 2009, right? So the banks lead us up, the banks lead us down. So I was like, this is a perfect sell on the XLF. If it works, we're going down again. If it doesn't, get long and get away, just because failed patterns are very powerful. right?
Yep.
And we're at the point where we could have a failed projection from 1896. Holy smokes.
Yeah.
This thing's gone. I just don't
Yep.
see that happening right now. So anyway.
Yeah, well, that's the beauty of charts, right? Because if you're looking at fundamentals, you might think the same thing, but you can't draw a line in the sand and say if earnings gets to X, then I'm gonna that's gonna be my line in the sand to get out.
Yeah.
I mean,
Yeah.
I don't know how anybody trades markets in general, and definitely not in this environment without using charts. And
I don't
honestly, I
know.
think even the most diehard fundamentalists use
Takes a peek.
charts also. Yeah.
Yeah. And uses basic support and resistance, which works, you
Yeah.
know. So yeah, we'll get after it. So what would you like me to look at first?
Yeah, no, why don't you go ahead and share whatever you wanted to share, and then we can do
So
the TSP charts at the end.
okay, so let me go to share. I've got more. Sure, there we go. Sorry, here. Okay, how are we looking?
I
You
can
see
see it
okay?
now. Good. Yep.
Awesome. Okay. So this is a chart of, and a lot of times, you know, you might, if you're watching this, you might want to zoom in. But I want to give the full picture. The numbers are important, right? But people can go figure them out. But here's the S&P, right? So, see how it's just starting to do that parabolic takeoff, and you wouldn't see that if you're not on a daily, a monthly, or if you don't have a chart that's going back to 1960s, right?
Right. So we're looking at a monthly. So each one of those red or green ticks is 1 month of price movement, right?
Correct. Yep.
Okay.
And so now all I'm doing is I'm putting a 14 period RSI on there. So the 4.236, again, these are all leading indicators. They're projections. Michael Jenkins of stockcycleforecast.com, who I've trained with a bunch, he taught me that a lot of times an end of move occurs when the initial impulse move, right? So we're going from this all-time low at 40.33 on the S&P, which I think, don't quote me on, it's in the 1950s. It might be 1953 or something. I'm doing a 4.236 extent projection from that initial impulse move up. Okay. And you know, and that drags us into about here. Right. So the other thing I'm looking at is we're not spiked up here. The last time we got higher RSI, honestly, was back in 1995.
Yep.
Right. So this is too far away to do the bullish bearish divergence, but this guy gives us a little bit of love here. Right. So I think we're topped, and we've got a really firm, see that? So here's this peak right here. Market goes down, goes up. Well, we don't have a higher, right? So this is actually bearish divergence. If we go to like a weekly, that'll probably be a little bit more pronounced. Okay. Here's that same high here. Actually, it's a little bit above it. Okay. But it's still not going to new highs. You see that?
Right.
And then when we come here to our daily, is this new high confirmed? Well, not really. Look, lower, 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 and lower here. So this looks like a nice little correction. Maybe we pop up to here, but we're getting close to, if not there, on the S&P. Okay. What I'm really interested in showing you guys, I'll show the Dow on the paid podcast, but just to get people, you know, interested. So again, what we're looking at here is the New York Stock Exchange Index, right? The NYA, and I think it's what now, 2,500 or so, thousands of stocks, and it's a great barometer of the overall health of the U.S. It includes everything that's traded on the New York Stock Exchange. Okay, so in this case, we're just going to do these blue line projections, and so from the low, when the New York Stock Exchange Index was inception, it was January 3rd, 1966 at $50. So that's where the 50 comes from. Okay. A projection, a 1.618 or 1.68179, which is a musical note, but basically smacks right into this area. And you can see here, we've got another set of projections that smacks right into this area. But the most important thing, and this gets a little bit esoteric, but it's called squaring out. And W.D. Gann, he taught that a price inflection occurs up or down when price and time are equal, okay? Or harmonic. So if you picture a square, Jerry, okay, might not be a perfect square, but work with me, right? You bisect the square by a 45-degree angle, okay?
Right.
And so, sorry about that. So anywhere on this square, if you hit that square, that looks like a square now, on that 45-degree angle, you have the equal amounts of price and time. So
Right.
this is time on the bottom. This is price going up. And so if I'm on a chart and I started here and I kind of banged around a little bit, I went to that point right there. At that point, the number of calendar days is exactly equal to the number of price points.
Okay.
Usually you get a correction and it goes up, right? And so we are right here. What does that mean? So, so this was from October 6th. Okay. Boy, I haven't updated this. I'll have to update it. But basically, we're sitting in around 21,800, 21,700. Right up here, we have squared out the inception date with price.
Right.
So we have an exact price equals time from the inception. That's what's such a big deal. So we have squared out the inception date on the New York Stock Exchange Index monthly. That should be resistance. Okay. That's why I'm saying I just don't see it blowing through here without a pullback. Now, what have the pullbacks been like since 2009? They've been very harmonic. So there's a pullback. All right. Here's a pullback. Oops, sorry. Right. So,
Yep.
Is that out of the question? No. So, and then look at that. That's such a key level. Look at that wick. So I'm just expecting resistance. That's what I'm saying. Is this the top, like we were talking about earlier? I'm not even going to begin to say I know. But what I'll, on the paid one, 47,000 takes us all the way back to the inception date on the Dow Jones Industrial Average. So, whoa. So that chart will blow some people's minds, right? So here's the New York Stock Exchange Index monthly. Here's a beautiful 1.618 price projection, along with a beautiful 3 drives to a top, ABC. And we squared the range from inception. It can't go any farther back is where I'm going, right? This is the square out. Should be resistance. 10%, 15% correction. Great. What was this? 20, 30%?
Yeah, that was COVID. So
there's a 37%, right? 23%. So up at these levels, the same price movement, we'll get about a 15, 20% correction. Sure, I'll take it. Please. Right? But I mean, we're getting there. Yeah.
Yeah. Well, the thing is, if we got a correction like that, that's still within an ongoing uptrend.
Yeah. Right? And here's the other thing too. Yeah, keep going.
I mean, people will look at that as it's catastrophic, but
exactly.
But that's just a breather.
Bingo. Because people aren't looking at the long term.
Right.
They're just looking at the daily chart, right? So that correction is massively bullish.
Oh yeah. If we only got down 23%, it would be massively bullish.
Yeah, but even 13,000, that's a 382. If you have in context that we're coming all the way from 50 years ago.
Right.
But look at this confluence level. I just did this. I mean, anytime you have a 382 on a 618, you want to mortgage your house for that. That's bullish. Because we know that it's come all the way from $50. Someone who's just started trading here thinks it's the end of the world.
Right.
So what I'm saying is, I think this might help out your subscribers and people watching the blog, is back out your time frame a little bit, increase it, right? And recognize that we are hitting projections that have been coming in for 100+ years.
Yeah.
They should work. And if they only correct 10 or 15%, that's wildly bullish,
Yep.
right? If they go down to, 14,000 on the NYA, that's kind of expected because it's such a long-term projection. But that's still really bullish in the context of 50 years. If only you have a 2-week, yeah, go ahead.
No, I'm saying, imagine the fear in the market if we came down to 14,000 on the New York Stock Exchange. People would be jumping out of roofs, but it would be, if we got an uptick from there, you get a green monthly candle from there, you it's the best buying opportunity of your lifetime.
Yeah, no one's going to want to do it. And then look at the,
Right.
the geometry of the market, right? I'll just get rid of these guys here. The market, and here's the thing, these are monthly candles, right? So everyone's going to, I'm in. Hold on, chill out, right? Look at this. So that's 2 months, but it's telling you it's ready to go.
Yeah.
Look at this wick, followed by a massive green candle. Get in here.
Yep.
Look at this bullish engulfing after the correction. Look at this wick.
Yeah, that April was something. That was
Right?
something else.
So, man, if we get below this, that's not good.
Yep.
But ultimately, that's great. And then we were looking at the level down here at 14,000. Well, what's this?
COVID low.
Yeah, but it's wave 4 of a lesser degree.
Yeah. Yep.
Right? So it's like, I expect a pullback. I'm still very bullish, but next, with the Bradley market on next 2-3 months, yeah, I wouldn't be playing any. So
Yep.
cool. So,
Awesome.
so that's SPX, and I wanted them to see this concept of square outs. The next one is VXF, and it kind of looks like the same thing here, right? Let me.
So we did the SPY or SPX, which is our C fund, first, and then we just did the New York Stock Exchange. But so this is VXF, which is the exact same chart as our S fund.
Correct, and I just can't get the S fund on this charting package. So
yeah,
thank you for letting your peeps know. So here's the 3 drives to the top, right? It seems a little higher than we'd want, but it's out there. And then we also got this guy right here. So people need to start thinking. Here's 230, so another $20 or so. It's time to let the emotions back up the emotions and just look at it realistically, right? We are really overbought, and this thing's looking like it's getting tired, doesn't it? And then I'll do one more projection here. And all I'm doing here, folks, is I'm just using all the different swings to project different potential areas for inflection. And then once you do hit an area of inflection, give it a little bit of time here and there. But ultimately, these longer term price projections are really powerful. And so you can see here, we hit the 1.27 price projection. So that could be it too. I wanted to see why I was pausing here. You see that, Jared?
Yep.
So and it kind of goes along with everything going on.
So your initial ABC projection, that would potentially be consistent with the blow off top.
Yeah. It's a great point. Yeah. So there's that other projection there. And then you got to look, right? Go ahead.
Yeah. I mean, it looks like either we're there, or we get this blow off top. And even if we get a little bit of pullback over the next couple of months, we still have that projection up there at 250-ish.
Yep.
As a more major top.
Correct. And then if we look here, here's 1, A, B, C, there's 2, 3, 4, doesn't break a rule. And so we're in kind of a fifth wave for this little area here, right? Certainly looks topish. And so let's do one last thing here, right? Insert study, how are we looking? Bearish divergence.
Yeah, S fund has significant bearish divergence, yeah.
Okay. So looks topish.
Yeah. Now the narrative, of course, is that at this point in the cycle, small caps, which is our S fund, is is the total market minus the S&P 500.
Okay.
So generally they look at it as small caps. It's small to mid cap, right?
Okay. Yeah.
At this point in the cycle, if there's some significant sector rotation rather than a complete sell-off, the small caps, rates come down. Small caps in this environment could do well,
Mm-hmm.
and that can get us up to that, 250, the top of that projection. So I'm just trying to basically align some of the charts with some of the narratives that are people definitely hear out there.
Okay. And so far, is it making sense?
Yeah, no, that's all I'm trying to do is sort of interject that how the narrative could align with the pattern.
Love it. And that you do that. I don't understand it.
I spent too much time listening to JC and some of the other guys that, are certainly default to charts, but
I tell you what, Straz, he's killing it. Steve Straza.
Yeah.
Yeah, those guys are good guys. JC's got it going down. I like Sean, the option Sean.
Yep.
And then there's a relatively a younger dude, Riley. He's like 28. Excuse me, 29. My wife brought me a matcha. He's really good, and he's really out in front of driverless cars, the next wave of transportation. Riley Rosenberg's his name. I think it's Godspeed's his podcast. Take a look at him. He's doing really good work. So this is EFA fund now, Jerry. I'm not sure what ticker that is for the TSP.
Didn't you say you could get up ACWX?
Let me see. ACWX. I did. Nice.
Okay,
I want to go back to EFA. I want to go back to EFA, right? Because, God, this looks like Germany.
It should.
Okay, good. I don't even know what it is.
It's the Europe Asia Far East Index. It's the majority Europe. Yeah.
I like this. So I've been watching Germany topping. You see it? Right? And here's the projection. Bam. And I copied that, right? Mr. Measured Move. I don't like that. Maybe I should be M&M, Mr. Measured Move. What was I doing there? Oh, I was doing this ABCD. So there's that. And then there's that, right? This guy looks like it could be topping. Now, would you close the position? I don't know. But I would certainly think about taking some profits on this guy if we get below $36 on Germany. So now we go back to what was the ticker? Hold on. I got it here. I'll just go one below you. Hold on. Boom. ACWX, right?
Yes.
Okay. So as we can see, it looks like Germany. If you go to Japan, look at Japan.
Yep.
Measured move, measured move, measured move, measured move. It's getting close, right? This 1.618 is all the way from here. So we go here. I can't. Let's see how my mouse is screwed up. Anyway, there we go. I'm back. So maybe topping here, Jerry, but then we've got this projection here. Ready? And off we go.
Yep.
So $5 more. If it wants to go higher. Right. So I'm glad that you showed me that, because I'm like, gosh, this looks like Japan and Germany. Well, it is.
It's a combination of both, basically.
We looked at Germany and we looked at Japan, and they sure looked like they're topping. So when we go back, again, what I would really watch if I'm a long-term investor trying to manage my portfolio for retirement, obviously, have we ever broken a swing low here? Not really, right? Stair step, stair step, stair step. Tried, still stair step, stair step, stair step. Broke one, stair step. This thing has not broken a swing low. So if we do top, I would stay with this one till $60. If we did get a weekly or a monthly close below that, something ain't right with the Circle K.
Yep.
Does that make sense? Right?
Yeah. So the kind of narrative that, or some of the stuff that I've been putting out anyway for the last several months, and I don't know if you think it's significant or not, but the red line that you have there,
Yeah.
The red horizontal line basically it's the first new all-time high since 2007.
Mm-hmm. Great point. Great
Right?
point. I didn't see that. Yeah.
So if we pull back, like you said, I mean, that 60 level is going to be critical, because if we pull back there and we get support, then we're in, for the first time in, since 2007, an outperformance of the international funds versus the U.S. funds.
That's right. And but what's scary is Japan and Japan and Germany are not looking too great right now, right? So here's what I'm trying to do. I'm like, all right, what type of correction could we expect to get it down to there? These are the normal pullbacks that you want to buy on. And you can see they're about the same. I think they're exactly the same. Yeah. Let me do it. So again, if we break below there, we're going to go to the not good. See that, Jerry? I mean, it's crazy, isn't it? They're exactly the same. But if we break 60, do you want to hold it to 47.50 or 47?
Right.
Probably not. Right. So take some profit and then get ready and probably get to play around there. 44 or 43. Makes sense?
Yeah, that helps a lot. I mean, because a lot of people now are looking at the international stocks, the international fund, the I fund, and it certainly has broken out and breaking above its all time.
It's probably going to do it.
Yeah, I mean, it's definitely has broken a significant top there at that red line.
Mm-hmm.
Ideally, we get a pullback. I mean, this straight up since April is not good. It would be great if we got a pullback to that 60 level, and then kept going from there. Can you do the fib retracement from like the last
right
the last major low to where we are
right
now?
Here?
No,
right here?
to the left, down to the left.
This guy?
Yeah, that one.
Yeah. And all we're doing here, right, is we're just trying to find confluence levels.
I mean, if we got down to that 618, that's pretty low. That's pretty far down there.
I can tell you what, it's probably going to bounce right here. See that overlap right there?
Yeah, that 38% right there is. Yeah.
So that's when, oh crap, bam.
Yep.
Right. And then I'm doing it rudimentarily, right? Obviously this is some sort of double, triple, three bull crap, right?
Yep.
So is this thing getting ready to run again? 1, 2, is this 3? Can't go below there.
Right.
Right. If that's 1 and 4.
Yeah. It's an interesting chart for sure.
Yeah. Thanks. That was fun.
All I'm trying to say is not to get your hopes up for an explosive move higher from here, but any decent pullback is more likely a buy than not.
Sure looks like it.
Yeah.
Now it could slow through. I just don't see it happening. Yeah. After we looked at Germany and Japan too.
Yeah.
Right. Okay. EFAGG, right?
Yeah. So those were our stock funds, and now the F fund is the aggregate bond index. That's quite the chart.
Yeah. I'm seeing one more move lower, and this kind of looks like the 30-year, right?
Yep.
And I've been watching this. So I've been long TDT for years. And so this is the long bond. Okay.
Continuous. It's a 30-year. Yeah.
Yeah. And again, I like this chart. I like going here because, again, I wish I had more data, but this encompasses the entire run, right? The bull run from the crazy 20% interest rates we had in the 80s, right?
Yep.
So there was the high in interest rates, which was about 20%. Okay. I really like this count, Jerry. It's kind of a Ray Charles-ish, but I'm seeing this right now as a fourth wave triangle.
Yep.
Okay. So 1, 2, 1, 2, 3, 4, 5, 3. Excuse me. 1, 2, 3, 4, 5, 4, 5, 3. A, A, B, C, D, E, one more dump. And
Yep.
then I got to tell you, this should be buy bonds for over a year.
Yep. No, I agree. I don't see us there yet, but I mean, but so if we get a dump in bonds down to your wave 5, that's a rise in rates.
Correct. Yes.
So it's not unreasonable given that we've seen rates, 10-year and long rates go up even as the Fed is cutting.
Yeah.
So there's all these things, right? Because people watch CNBC and Bloomberg and they
I
people,
don't.
yeah, well, when the Fed cuts rates are supposed to come down. Well, the Fed doesn't cut rates, right? It cuts the interbank lending rate, which the long rate, the bond market doesn't really care so much about what the Fed does necessarily, and they control the long bond. They're controlling this chart. So if the Fed cuts rates 25 basis points, the bond market doesn't necessarily play along.
Correct. And they're always lagging it too.
Yeah. Now this is a great setup.
I used to have the 10-year, but for whatever, see, it's not giving me the symbol. But I show it's the same. Yeah. Now I don't know if I posted about the TLT. This is massive support for TLT, right?
I mean, it is, but that's just because that was the inception of it. If you were looking at the 10-year, the chart would go back further, right? And maybe you don't. I mean, you get that support level for sure anyway, because you got a bunch of those bottoms there at the same place. But
yeah, I just I could see, and again, let's be conservative, right? The world's crazy right now. A dump, right? So A, B, it's just not the same, right? But a dump here, it starts back up. If we get a weekly close back above this, right? Because polarity says this will be massive resistance.
Yeah, on the upside, yeah.
That would be your signal. We get a daily or a weekly close above this level, then I could see us going up into here. It could be a great year to year and a half trade.
Yeah. And so for like, I talk about it quite a bit on the podcast or the newsletter. When we get that, so we had 5 waves down, or we're looking for the 5th wave down, but we're in this 5-wave count. When that bottoms and we get some kind of ABC recovery, it can take us up to say 140, and that means interest rates are going way down, which means if you want to buy a house or refi your debt or anything, that is the last best time in your life to do it, because after that, this is 5 waves down, which is a bigger one. And then we get that
Or
ABC or A, right? But either way, we're going to get a big move down in TLT, which means a big move up in interest rates.
Correct.
So if we got up to 130, 140 on the TLT and it rolled over, that's when you want to buy. That's as low as rates are going to go.
Correct.
For the rest of our lives.
Probably.
Yeah.
Yeah. And the other thing too is just go do the historical look at war and interest rates. They never go down. Right. But I mean, look at this. Again, this is Elliott Wave, and I hate the coulda, woulda, shoulda, but coulda, woulda, shoulda. I don't think this is A down, B, and we've finished a 5-wave C wave. I don't think that.
Yeah.
I think it's 1, 2, 1, 2, 3, 4, 5, 3.
3. Yep.
It's pretty nice count, right? So now where do we go? Well, this doesn't look like a triangle, does it?
Not anymore.
Not anymore, right? So this to me is where 4th wave is complete, okay? So 5 equals 1 a lot of times, right? There's 1. So let's take an initial target of about $75. So $13 more down, right?
Yeah.
And then what I've also been watching on TradingView is the 10-year. Sorry guys, I'm just trying to. trend line. Where are we at here? Oh, so shit, that's another 25%, totally down. And from current levels, 18%. Remember, these are monthly charts, right? So what I've been watching is the 10-year going all the way up and tagging the 382 from the all-time high in interest rates of 20%. That's around 6% on the 10-year, dude.
Yeah.
You know, so and again, that goes to what do you call it? The G fund, right?
Yes. Yeah.
You might be able to pull 5 or 6% out of this thing, just putting it in the G fund. Not bad.
Especially if stocks are going down and you're getting a no market risk 5 or 6% in the G fund, I don't know how you argue against that.
Yeah. I wish I had it, but I'm not in the government anymore.
Yeah.
So,
I'd rather not be in the government and have to play in a bond market somewhere. Yeah.
oh boy. Yeah. And again, last thing, my mom's 96, right? So she lived through World War II. My dad was a ordnanceman on the Shangri-La, right? Not many World War II people are around.
Yeah.
We're not talking about us owning the skies of Iraq and basically Fallon East was Iraq.
Yeah.
We're not talking about complete air superiority over Afghanistan. We're not talking about, looking at Houthi rebels running around in jeeps, which, oh, by the way, are crippling multi-billion-dollar ships. We're talking about entangling alliances of an amazing amount with near peers. I mean, Russia just launched a nuclear-powered missile.
Yeah.
Did you see that?
Yeah.
That can stay in orbit and wait to get its targeting, which, oh, by the way, is a nuclear tip. Ooh, okay, that's another. And then the next day or 2 days later, they launched did you see that? The radioactive tsunami wave?
Oh, I haven't seen that one.
Oh, yeah, they tested a submarine missile that basically would create a 1,500-foot wave of radioactive waste. Look it up. Crazy,
I
right?
will.
And then China, they just came out that they have a radar that can see stealth.
Oh, fantastic.
So we've just rendered our carriers as sitting ducks. I think they already are. Drone swarms, right? So if this thing ever cooks off, it's crazy, right? And that could get our Dow to explode.
Yeah.
So, but again, now I'm talking fundamentals. I really understand them. So
Yeah.
All
it's
right,
hard. It's hard not to. Yeah, dude, that was great. Let me
Awesome.
just to wrap it up, right? If you're a TSP investor or a 401k investor, and your perspective isn't back to 1896 on a chart, what are you looking at for 2026 given the valuations of the market right now?
I think overall, if we're jumping into our time machine into November 2026, I bet we'll be flat, right?
Yeah.
I do see a pretty big correction coming. Pretty big in my context, being a 15 to 20% correction. Maybe be a lot of doubters, right? I don't know if there'll be an explosive blow off like it has been since April. But if you look at 15% down, back up, and look at the whole year, it'll probably be maybe up a couple percent, down a couple percent. But ultimately, I think this run needs to get some gas. It needs to pull into the EV charging station, if you will.
Yeah.
But again, we got to roll. I think AI is above it, right?
Yep.
And the big thing about that is when I was in Bali, I told you I couldn't surf. It was horrible, but it was great because I was so humble. It forced me to just sit. And so I watched these individuals our age come walking down, no shoes, Bali. It's a third world country.
Yep.
And every time they threw the net in, they pulled out fish. And my son-in-law's Indonesian American. His mother's Indonesian, his dad's American. And my daughter and him met up at University of California, Santa Barbara. I said, Clint, those guys are more important than the Silicon Valley AI coders. He's like, yeah. I go, they're catching food for their village.
Yep.
And I'm like, wow, we've got a language translation issue, about the importance of this and that. So when I start thinking of AI, we always think the A is artificial, right? If there's so much promise in AI, how could it be a both? Well, I think the definition of AI needs to just be tweaked a little bit. The AI that we're talking about, that these LLMs, large language models They're running out of data. They need a minimum 400 years of data to be considered an LLM. 400 years, right? That's why Elon Musk is asking everyone to upload videos on YouTube channel, right? So they can get more data. And the power requirements are crazy. It's because it's the end of algorithmic intelligence. These aren't true thinking, reasoning agents. Active inference agents are, and they're coming. I think they'll be here in about 6 months. So I think the deep learning, machine learning, the algorithmic LLMs, right? They're just waiting. They won't do anything unless you ask them a question.
Right.
So in the background, they're not thinking and learning yet. Algorithmic intelligence, I think, is about to thump, and that'll be your NVIDIAs will take a big thump. On the paid one, we'll go ahead and we'll show there's an incredible measured move that ended up on the semiconductor index. Yep. It's perfect, right? But ultimately, I think this next wave of AI will dominate what's happened already, if you can believe that. Or not. So is algorithmic intelligence bubbling? Yes. Is authentic general intelligence, like it's literally off thinking and reasoning, that's just starting. So cool.
Yeah, it's going to be exciting times, no doubt about it.
Yeah.
Dude, I really appreciate you taking the time to do this for us.
Thank you, dude. It's my pleasure, Jared.
Where can I mean, I'd be amazed if people didn't want to follow your work. Where can they find you?
Thank you. It's easy. It's Bart's Charts. My wife came up with that name. So I blog. It's free. I'm thinking about putting together some courses, maybe start a Substack. I'm sick of giving this stuff away for free, but I really enjoy it. It's my passion. I'm in the market. I don't do any coulda, woulda, shoulda. It's all real time. You follow me, right? Sometimes I'm right, sometimes I'm wrong. But ultimately, I just have a lot of fun, and I find it really relaxing. So bartscharts.com, sign up. It's free.
Awesome. Bro, thank you very much. I appreciate it.
You got it, man.
We are out of here.